This conference will now.
Okay. So cost assumed here is taken for a single bus made by Volvo. Okay. So here we are going to do the case study on a premium bus service. The actual bus cost around 75 lakh, which is including the additional expenses. Okay. However, along with the vehicle, there are additional charges like registration fees, registration, insurance, taxes, everything. Including that one only, the cost of bus is coming to 75 lakh. Also, since the bus will be used for hire purpose, we leave some margin for the accessories that might get added to it. So, including the accessories also it is coming. Some amount will have to be spent on acquiring all India permit to use the bus for transportation purpose. The company can incur 10% maintenance cost on the bus per year with the acceleration rate of 15%. So maintenance cost 10% will be there. So where there is an escalation by 15%. Due to excessive usage, the bus it is assumed the life of bus will be for 4 years. So the life of bus is just for 4 years. The income tax department follows the written down value method for depreciation. The specified rate of depreciation is 25%. The company could not purchase the bus through its own cash reserves. It needed help from the bank. The company took loan of 75% on the total cost of bus. So 75% on the total cost, that is 75 lakhs. They have taken 75% of loan. The bank, however, charged the interest rate of 15% with a tenure loan of 4 years. So 15% interest they are charging. Interest rate value is expected to be high as the vehicle will be used for commercial purpose. So why they are charging 15% of interest rate means because the bus will be used for commercial purpose. The repayment schedule is going to constant amount to be paid every year. You also have the option to pay back lump sum in the end. So we can pay the loan amount lump sum in the end, but here the bank is insisting to pay some amount every year. So they are not accepting. The bank people are telling that you need to pay some amount throughout the year. Year by year, you need to pay some amount. The cost of equity is 20%. Okay. So equity cost is 75% means here equity cost will be 25%. So here we'll just make the change 25%. So once the bus service starts, the bus has 35 seating capacity. So the number of seats available in the bus is 35 and the load factor is 50% and the mileage is only 5 kilometers per liter. Okay. So per liter it is giving me 5 kilometers per liter. Total distance from Mumbai to Pune. So the bus is going to travel from Mumbai to Pune, again Pune to Mumbai. Like that, so from Mumbai to Pune, it is 310 kilometers. Time taken for the trip is 3 hours. So 3 hours means the Volvo company works only for 4 hours. That means 4 trips it is going to take. 4 trips means so one from Mumbai to Pune, again Pune to Mumbai, again Mumbai to Pune, again Pune to Mumbai. Okay, 4 trips it is going to take. Also, other costs to be taken like driver cost is around 1200 for every Mumbai return. So that means Mumbai return means going from Mumbai to Pune, again coming back to Mumbai. So that means per trip he is charging 600 rupees. Okay. So one trip going and coming back he is charging 1200. And toll price to be paid during the trip in a day is 3200. Okay. So 3200 in a day. So per day how much it will be? 800. So 4 trips means 3200. 800 per trip. The toll fees will be 800 and other miscellaneous charges of 300 per trip. So per trip they are charging miscellaneous of 300 rupees. So miscellaneous costs include the cost of parking the bus in a shade. So parking charges also is included in the miscellaneous. Amount acts as a buffer and also takes consideration the cost associated with the co-driver. To generate revenue, Volvo decides to charge 350 rupees per person. So the ticket fare is 350 per person and due to inflation they plan to escalate the ticket price by 10%. So here by here they are going to hike, they are going to increase 10% of the ticket cost. The diesel required by the bus is charged at 64 rupees per litre. Per litre, this one is diesel charges is 64 with the escalation price of 15%. So diesel price is going to be increased by 15% year on year. Inflation also includes driver cost and miscellaneous expenses. So driver cost also there is 15% increase and miscellaneous expenses also 15% hike will be there. Evaluate the above proposal of running premium bus service between Mumbai and Pune. Assume the tax is 5%. So here they are not telling the accurate tax rate, they are telling we can assume it has 5%. The income generated from this business will be invested in some other place to take additional income of 5%. So here we have to calculate the additional income also. Okay, so clear about this. So based on this, now we need to calculate the, we have to create the financial model. I'll give you 5 minutes of time. I wanted you people to go through the case study. Once you are done, so we will start with solving the values. I hope you people have downloaded the case study Excel file also. Download the file and just go through the case study. Okay, let's solve with the case study. I hope you people have downloaded the file and ready with it. So the cost of the bus. So here we have to put all the values. So cost of the bus is equals 75 lakh. So then maintenance. So maintenance, what they are telling, maintenance 10%. Then escalation in the maintenance is 15%. So life of bus is 4 years. So the depreciation rate. So depreciation 4 equal years they have to. So 4 equal years means out of 100, 25% it will be. So 25% it is in straight line method. Okay. So then seating capacity. So seating capacity, what they are telling, there are 35 seats. So 35 seats. Load factor, it is 50%. Then tariff, ticket price. So ticket prices, so 350 rupees. So acceleration by tariff, they are telling 10% ticket price will be high. So now debt. So debt, what they are telling, 75% of the total cost of bus. So 75% we are taking the debt. So equity will be 25%. Interest on debt will be, so it is 15%. Rate of interest 15%. Then tenure for loan. So what they are telling, tenure for loan is 4 years. So cost of equity, we are not going to give anything for time being. Fuel efficiency. So they are telling 5 fuel efficiency. So mileage 5 kilometers per liter. Fuel efficiency is nothing but mileage. So driver cost. So driver cost, what we are telling, the cost of driver is 1200. So per trip he is charging 600. So miscellaneous is charges is 300. So 300 miscellaneous. Toll charges. So toll charges to be paid during 3200. So 3200 means 4 trips. 4 8s are 32. So 800 rupees is the toll charges. Then tax rate. So tax rate, what they are telling, it is 5%. They told to assume the tax rate at 5%. So 5% tax. So debt value, we are not going to tell anything. Interest income. So interest income, what they are telling. So additional income. So it is 5%. Then diesel rate. So diesel rate is, so here we will keep the diesel rate as, sorry, here it has mistake. It is 65. 65. Diesel rate, we keep it as 65. Some mistake in the questionnaire. So diesel price escalation is 15%. Then inflation. So inflation in the driver cost, miscellaneous expenses, everything by 15%. So route, we are going to follow it from Mumbai to Pune. So kilometers, so the distance. So 310. So back from, so they are telling Mumbai to Pune and back is around 310. So 310 divided by 2, if I do, equals 310 divided by 2, it is 155. Okay. So here I am going to take distance from Mumbai to Pune is 155. It's 155 kilometers. Estimated tours, but so how many trips we are going to take? So time duration, what it is going to take is 3 hours from Mumbai to Pune. So here they are telling from Mumbai to Pune it is 3 hours. Then trips per day. So 12 hours they are going to work, means they are going to take 4 trips per day. Okay. So I just wanted you people to put this values. It is nothing but from the case study. I'm just entering the values in the Excel sheet. I hope everybody's login is created and you are able to access it. Yesterday, I think some two, three girls till last they were there. I hope you people also check. Type in one if you people have done with the entering the values. Okay. So let's go further. So now we have to create the income statement. So we need to calculate the revenue. So equals. So revenue. So what they are telling, in order to calculate the revenue, first ticket fare, that is 350, into the seating capacity 35, into, so the load factor, that is 50%, into how many trips we are going to take. So there is 4 trips that is going to happen. So this is per day, and I need to calculate it for one whole year. So into 365. So I repeat once again, equals the tariff, that is ticket price 350, into, so the seating capacity. So there is seating capacity is 35. 35 into the load factor 50% of load factor, into how many trips they are going to take per day, 4 trips. So I need to calculate, this is for one day. So we need to calculate it for 365 days. Okay. So revenue, they are telling inflation by 10% equals previous year value into 1 plus 10%. Enter. So I need to drag it to the last year. I hope you people understood. So this is little bit confusion part. If you people have understood, type in 2. Only 2 people understood. Okay. So let's get back to the case study. Other income. So other income, for instance, I cannot calculate it until unless I clear my cash flow statement. Okay. So that is why I have left the marking in green color, that it will be solved later. Let's come to the fuel cost. So fuel cost. So the distance. First, I am going to take the distance. Let's put it in a bracket 155. Distance 155 kilometers. So divided by fuel efficiency per kilometer divided by 5. Okay. So this is going to happen into 4 trips, into the cost of this one. Fuel cost is 65. 65, and this is for per day. I need to calculate it for 365 days. So I repeat once again, open the bracket. I have to show the division, so I am taking it in bracket. So the distance is 155 kilometers divided by fuel efficiency, that is divided by 5. Close the bracket. Equals 155 divided by 5 into number of trips is 4, into fuel cost 65, into this is per day. So I need to calculate it for 365 days. And here what they are telling, so diesel price escalation means there is increase in the diesel price year after year by 15%. So I'll come here, equals previous year into 1 plus 15%. Enter, and I'm going to apply it for the rest of the years. Now maintenance expenses. So maintenance expenses, what they are telling, is maintenance. So maintenance is on total revenue. Okay. So maintenance expenses, what they are telling, maintenance expenses is 10% on the total revenue. So I come here, equals revenue into 10%. So this will be your maintenance expenses, and they are telling that there is an escalation in the maintenance by 15%. So equals previous year value into 1 plus 15%, close the bracket, enter. Maintenance expenses, drag it towards your right. Now driver cost. So driver cost is 600 rupees equals 600. So how many trips he is going to take per day? He is going to take 4 trips. So this is for 1 day. So like this I need to calculate it for 365 days. So they are telling driver cost. So here if I come, so driver cost everything, there is escalation by 15%. So here, so escalation price by 15%. Inflation also includes driver cost and miscellaneous expenses here if you see. Okay, so I come here. So driver cost here on here it is increasing by 15% into 1 plus 15%, enter and drag it towards my right. So miscellaneous cost. So miscellaneous cost, how much they are telling? 300. So equals 300 into 4. So miscellaneous expenses is happening for 4 trips. That is for 1 day. So I need to calculate it for 365 days. Sorry, 365 days. And what they are telling miscellaneous also, just now we saw there is an inflation by 5% year on year. So equals previous year into 1 plus 15%. Enter. So I will drag it here. So total amount. So sorry, total amount. So total amount, how much it is? 800. So here will come 800. So into 4 trips. That is for 1 day, and I need to calculate it for 365 days. So total amount is going to remain same. They have not explained anywhere that there is inflation in the total amount. So this value is going to remain same. Okay. So now cost of revenues equals sum of E24 to E28. Enter and come here and I will. So I wanted you people to solve with this. So before we go further, there is a little bit of confusions which might happen. So I wanted you people to apply with this. Hope you people understood. Type in 1 if you have understood till whatever I have taught.
Mom, can you explain maintenance expenses again?
Maintenance expenses. So maintenance expenses in the case study, if you see, maintenance expenses I have mentioned. So maintenance cost, they are telling 10% maintenance cost is going to happen. Okay. So here maintenance cost means it is on the total revenue. So total revenue is this value. So I take equals total revenue into 10%. So 10% on the total revenue will be my maintenance expenses, and they are telling there is an inflation by 15%. So here escalation rate by 15% they are telling. So here I come equals previous year value into 1 plus 15%. Close the bracket, enter, come here and drag it to the right. Got it, ma?
Yes, thank you, Mom.
Hope you people are able to do it. If anybody is having any doubts, please ask. Any doubts people can ask? So let's go further. I hope till here everybody were able to do it. So now we need to calculate the EBITDA. So EBITDA will be equals sum of, open the bracket. So that is revenue and other income. But still here we have to calculate the other income. So let us find minus the cost of revenues. Okay. So I'll come here. I'll tell you once again, equals sum of, open the bracket, so revenue and other income minus cost of revenue. I'll come here and I will write. So depreciation. So depreciation, what they have told. So the bus is going to be useful only for 4 years. So the actual cost of the bus is 75 lakh divided by 4. So depreciation, so this is going to remain same for every year. So I'll drag it this side. So now I need to calculate the interest expense. Interest expense is on which one? So the loan what I am taking. Okay. So for that, before we enter the values here, I need to solve the debt schedule. Okay. So debt schedule, we will sort this out. So debt schedule, end of the period. So debt, how much it is? So it is on 75 lakh, 75% bank loan I am taking into 75%. Okay, so now end of the period debt is this much. So beginning of the period will be end of the previous year debt. So I'll take this value, enter. Interest rate. So interest rate, how much they are telling? So debt is 75% and interest on debt is 15%. So equals previous year value into 15%. So that is, so here EAI. So EAI is nothing but equal annual installment. So here I need to use PMT function. PMT, open the bracket, rate is 15%, comma, n per number of period is 4 years, comma, present value. So present value is this, comma, so future value is 0, comma, end of the period. So now I need to check the end of the period. Before that, principal repaid. So how much is the principal repaid? So equals this value. Sorry, not this one. Principal repaid minus. So for further calculation, I forgot. See here, I cannot take the negative value for further calculation. So what I will do here, I am going to add, put minus sign before. Okay, so now principal repaid will be equals EAI minus interest. Okay, and here end of the period will be equals, so that will be the beginning of the period minus principal repaid. So here I need to put the principal, this, that is end of the period. So instead of doing that, what I will do is I'll just select this entire thing and drag it towards my right. And here also I'll just come here and drag it towards my right. So here one mistake what is happening is EAI, it is every year equal installment. That means, so every year the EAI is going to remain same. So previous year value, enter. I'll come here and drag it. So end of the period, the amount will become 0. If people have understood, or you want me to explain it once again, type in 2 if you people have understood the debt schedule.
Ma'am, please explain it once again.
So end of period, the debt value, how much it is, equals 75 lakh into, so how much percentage of debt I am taking? Loan 75% on this total investment. That is 56 lakh 25,000. Beginning of the period will be previous year's end of the period value. Okay. Interest expenses. So on this 15% interest we are going to pay. So EAI, nothing but equal annual installment, that will be PMT function I need to apply over here, PMT minus rate is 15%, comma, n per number of period is for 4 years, comma, present value it is 56 lakh 25,000, comma, future value is 0 at the end of the period. Okay, so here it is showing in negative value which I cannot take it for the calculation. So what I will do is I'll just put minus sign in the beginning so that my value will be in positive. So now principal repaid equals EAI minus interest amount. This will be my principal repaid. Okay. So now end of period. End of period will be equals beginning of period minus principal repaid. Enter. So now again I am not going to apply the same things. What I will do is I will select the entire column and I will just come and drag it towards my right. The same way principal repaid also I will drag it towards my right. So here you need to understand the EAI values are differing from year to year. So equal annual installments, every year my installment is going to remain same. The name itself tells equal annual installment. So here I need to come and take the previous year value. So I am going to apply the same for the rest of the years. So at the end of the period, you can see end of the period that debt value will become 0. So type in 1 if you people have understood with the debt schedule. Only 2 people understood. What about others? Okay. If anybody still did not understand, please tell. Okay, hope everybody have understood this. We'll go further. So here now the interest expenses I have got for all the 4 years. So what I will do is here I'll come to the interest expenses equals I will take the first year interest expenses. Okay, interest expenses here also. So I'll come here and I will drag it towards my right. So profit before tax. So I got this now profit before tax. So it will be equals EBITDA minus depreciation minus interest expenses. So profit before tax, EBITDA minus depreciation minus interest expenses. I'll come here and I will drag it towards my right. Now income tax how much they are telling. So first year it is negative value, that is loss. So first year I cannot show the tax. Second year I come here. So tax what they are telling, tax is 5%. So assume they have told here. So assume tax is 5%. Okay. So here I will come. So equals the PBT, that is profit before tax into 5%. And come here and drag it towards profit after tax will be equals E35, that is profit before tax minus the tax. So first year it is a loss. So I'll come here. So understood till here. Just type in 1 if you have understood till the profit after tax. Type in 1 if you have understood till profit after tax. Okay, very good. Now I wanted you people to solve till here debt schedule as well as this one. So I'll give you 10 minutes of time. So debt schedule. So after from EBITDA, you need to solve these two things.
Can you show debt schedule again? Sorry, my net was lagging, so I couldn't see.
Who is this? Shohana.
Shana.
Okay. So after the debt schedule, you were able to follow it from the interest expenses, EBITDA and all, you were able to follow it. Only the debt schedule part you did not
Yes,
understand.
ma'am.
Shona,
Only debt
debt
schedule.
schedule. Okay, fine. So I delete it. So debt end of the period at the end of the first zero here, I need to calculate the debt, that is 75 lakhs into 75% of bank loan we are taking. Okay, so this is my end of the period. So Year 1, the end of the period value will become the beginning of my period. Okay. Now interest expenses. Interest, how much they are telling? 15% of your loan. So I'll come here, equals the value that is beginning of the period into 15%. Okay, and EAI means equal annual installment. So where I am going to apply the PMT functions. So we have already solved many debt schedules and all. So you people must be able to identify what has to be applied here. So rate is 15%, comma, NPAR is for 4 years, comma, present value is 56 lakh 25,000, comma, future value is 0 at the end of the period. So I'm going to get the value negative. So for calculations, this value I cannot take it in negative. So what I will do is I'll just add minus sign before PMT so that my value will become positive. Now principal repaid equals EAI minus interest. This is my principal repaid. Now end of the period. So equals beginning of the period minus principal repaid. Okay. So here again I am not going to apply the same calculations. I'll select this entire column and drag it towards my right. And here also I am going to apply the same thing. So here one thing you need to notice is EAI. So it is differing from year to year. EAI means what it is? It is equal annual installments. That means all the 4 years the EAI, that is PMT, is going to remain same. So what I need to do here is nothing but you just take the value of the previous year EAI and drag it towards the right. So here you can see now your debt value at the end of the 4th year it will become 0. So this value, this interest expenses, I need to take it here. So interest expenses, so I put equals and take the value from here and drag it towards my right and apply the further calculations. Understood, Shwana?
Yes, ma'am. Thank you, ma'am.
Okay.
Excuse me, ma'am.
Yes, ma'am.
Can you please repeat profit before tax, income tax, and profit after tax once?
Till interest expenses it is understood.
Yes, ma'am.
So here profit before tax. So profit before tax, what I will take is gross profit, that is EBITDA minus depreciation minus the interest expenses. Okay, so that is PBT, profit before tax. So first year after all these expenses, I am in loss. Okay, I am going to uh, drag the same to the rest of the years. Income tax. So income tax is tax what they are telling. It is 5%. In the case study also it is mentioned tax can be assumed as 5%. So income tax for the first year it is going to remain 0 as it is a loss. So next year I'll come equals. So that is profit before tax into 5%. So I'm going to drag the same for the rest of the years. Now profit after tax will be profit before tax minus the tax. So first year it's a loss. So I'll drag it towards my right. This is my profit after tax. Here.
Yes, ma'am. Thank you.
I hope you people are able to solve it. Okay, let's move to the next part, that is balance sheet. So cash, this one also we need to calculate the cash flow statement, then only we can enter the value. So let's calculate the PPE gross, that is asset value. So it is 75 lakh. So it is going to remain the same throughout all the 4 years. So now depreciation. So year 0, there is no depreciation that is happening. So it will be 0. So here now accumulated depreciation. So we have discussed about this accumulated depreciation, that will be previous year depreciation plus the current year value. So equals previous year depreciation plus the depreciation value here. Okay, previous year depreciation plus the current year depreciation, that is accumulated depreciation. So I will come here and drag it towards my right. Now PPE net, that will be equals the actual cost, that is PPE gross minus accumulated depreciation. So here 1, the value is going to remain the same and drag it towards my right. So at the end of the 4th year, so the value of the bus will become 0. So total assets equals cash plus the PPE net. Okay, so cash value we need to put it here, but still we can take total assets, whatever the cash I have and whatever the PPE net I have. So I'll come here. So this is on your asset side. Now I'll come to the liabilities. So debt. So debt, what they are telling. So end of the period equals L46. So I am going to come here and drag it towards my right. So whatever the end of the period, the debt value is there on the debt schedule. It has to be bought in the liability side of your balance sheet. Now equity. Equity, what did we tell? So it is 75% loan means 25% is your equity. So equal 75 lakh into 25%. So this is going to remain same for every year. Then retained profit. So retained profit will be, for the first year, it will be 0. So second year, retained profit equals, so previous year retained profit plus the profit after tax. So retained profit will be previous year retained profit plus the profit after tax. Enter. So I will come and drag it towards my right. Retained profit, total liabilities. It will be equals debt plus the equity plus the retained profit. So let's check whether everything is proper. It will be equals total assets minus total liabilities. So I will come and drag it towards my right. So until unless we put this cash value, I'm getting this value. Once we put it, it will be fine. So hope you people understood the balance sheet. Type in 2 if you people have understood the balance sheet. Type in 2 if you people have understood the balance sheet.
Excuse me, ma'am.
Yes, who's this?
I'm Sarah.
Yeah, tell me, ma'am.
Ma'am, I understood the liability part, but not the asset part. Can you explain that once again?
So for instance, this cash is going to remain empty because we need to calculate the cash flow statement. So PPE gross. PPE gross is nothing but your asset value. So what is your asset? That is the bus. So what is the cost of the bus? It is 75 lakh. Okay. And this asset value is going to remain the same throughout the end of the period. Okay, so for all the 4 years it is going to remain the same. Now accumulated depreciation. So previously when we have done the balance sheet everything, we have calculated accumulated depreciation. Accumulated depreciation means what? Previous year depreciation plus the current year depreciation, that will be my accumulated depreciation. So here first year the accumulated depreciation will be 0, nothing is there. Okay, so from year 1 we will be calculating the depreciation. So for the first year what I will do is, here zeros depreciation plus the current year's depreciation what I have taken here. Okay, so enter, and I'm going to drag it towards my right. Okay, this is my accumulated depreciation. So PPE net. So PPE net is nothing but equals, so your cash value plus depreciation, accumulated depreciation. Okay, sorry, it's not accumulated depreciation. Yeah, PPE net is, so the cash and the accumulated depreciation. So first year it is going to remain same. I'll come here. So this is done. So at the end of the year you can see the actual value of the bus, it has come here. Now total assets will be equals cash plus the PPE net. Enter. So first here it is 0. I'll come here and drag it towards my right. Done. So here is, okay, sorry, here it is equals PPE net. So it is PPE net minus the accumulated depreciation. So I'll come here and drag it. So at the end of the year, total assets will be 0. Okay, so the liabilities part you told you have understood it. So once we apply with the cash amount, here the value, the checksums, you will be able to understand. Clear? So people can solve this balance sheet.
Excuse me, ma'am.
Yes, ma'am.
Ma'am, the PPE is not coming correct.
BP is not coming correct. Why? The
Ma'am,
cost of the bus is 75 lakhs, right? I'm
ma'am,
taking
but
the
it's
value
written
there.
seven. Excuse me, ma'am.
Yeah.
Ma'am, but what about the cash thing?
Cash part, first we need to solve the cash flow statement. Then only I'll be getting the beginning of the period cash
And
and
then
end
ma'am, the
of the period cash.
PPE gross thing is also wrong, I think, ma'am. Can you cross check once?
PPE gross means what? Assets value. So asset value means here it is 75 lakh, right?
Ma'am,
So the
you have
total,
added an extra zero.
who have added the extra zero? Me. So there must be five zeros, I believe. Just check how many zeros will come in 75 lakhs.
Ma'am, can you show the
Yes.
PPE net once again?
This one PP gross.
No, ma'am, net.
PP net. Where we have calculated PP net here.
Ma'am, PPE net right after depreciation.
That is interest expenses what we have done
No,
and
ma'am, in
profit
assets.
before tax. In the assets, PP net means here I have taken the value. So here it is gross, PP gross minus the depreciation. So the actual cost of the bus is 75 lakh. Okay. So that one I am taking it as a actual value, PP gross what I am taking, and this is going to remain same for the rest of the year. Then accumulated depreciation. So accumulated depreciation for the year 0. So no depreciation will be happening. So PPE net is PPE gross minus the depreciation. So I am going to get the PPE net. I've calculated it directly. So accumulated depreciation means what? Depreciation of the previous year plus the current year depreciation. Both together it is called as accumulated depreciation. So PPE net is nothing but So the actual value of the asset minus the depreciation. After the depreciation, what value? Whatever remaining is my PP net.
Okay.
So let's come for cash flow statement. So profit after tax. So here 0, profit after tax is going to be 0. So I'll come here and drag it towards my right.
What is she doing
Then
here?
who's that? Girls, did you ask something? So depreciation. So depreciation current year 0, it is nothing. So still we have to take the year 0 value here. So I'll come here and drag it towards my right. So cash flow operation equals sum of, open the bracket, so D59 to D60. Enter. Come here and drag it towards my right. So capital expenses, that will be, so, so capital expenses. So previous year minus the current year. So the previous year value minus the current year value. So that will be my capital expenses. So then we have cash flows. So equals sum of the capital expenses. I'll come here and drag it towards my right. Then debt repayment. So it is debt value minus the previous year value. Okay, previous year nothing we have, but actually the calculations will be done with the previous year value. So debt repayment is going to, I'm going to drag the same towards my right. Equity addition equals equity, current year equity minus the previous year. So next, cash flow from financing. So equals sum of, open the bracket, so that is debt plus the equity. So whatever the actual cost of my asset, I will get this value and drag it towards my right. So net change in cash. So it will be, so that is cash flow from finance plus cash flow from investment activities plus cash flow from operating expenses. So cash flow statement, if you remember, CFO plus CFI plus CFF. So net change in cash, I'm going to drag it towards my right. Now cash at the beginning of the period. So beginning of the period, it will be 0. End of the period also, it remains 0. That is in year 0. So now cash at the beginning of the period equals, it is cash at the end of the period. So here it will be equals cash at the beginning of the period plus net change in cash. So I'm going to drag the same. Previous year end of the period. So I'll come here and drag it towards my right, and here I'll come and drag it towards my right. Okay. So now I have got the beginning of the period and end of the period. Now I have to put this value to my income statement and balance sheet. So once I have got these values, I'll come to income statement where I need to calculate the other income. So here other income, what they are telling, 5%. So other income 5% they are telling. So equals 5% into, so that is beginning of the first year. Okay, cash at the beginning of the first year, 5% into cash at the beginning of the period. So I'll come to this point, I'll come here and drag it towards my right. Okay, so balance sheet I have put. Now here in income statement I have put. Now I have to put the cash value in the balance sheet. So balance sheet equals, so that is end of the period. So I'll come here and drag it towards my right. So now you can see the checksum, it has become 0. That means both the ends, balance sheet, total assets and liabilities, the calculation is done. So understood with the financial cash flow statement. So next we are going for free cash flow. So it is already going to be 740. Let me finish this. Then I will give you sufficient time to solve this. So free cash flow statement is done. So before I apply with the free cash flow, let's calculate the return analysis. Okay. So I'll just delete these values. So it is equals cash flow from operating expenses plus cash flow from investing activities plus cash flow from, okay, debt. Enter. So I'll come here and I will drag it towards my right. So first we will calculate before the cash flow statements. Here also we'll calculate the IRR, and return analysis also will calculate the IRR equals IRR. So select the values from the year 0 to the 4th year. So it is 26.8. Okay, now after this we will be coming to free cash flow. So net income equals profit after tax. So I'll come here, drag it towards my right. Then depreciation will be equals depreciation. So I'll come here and drag it towards my right. Capital expenses equals capital expenses. I'll come here and drag it towards my right. Then debt repayment equals, so debt repayment here we have, so I'll come here and drag it towards my right. So cash flow from equity, cash flow to equity equals sum of, open the bracket, so that is from D82. So net income plus depreciation, capital expenses and debt repayment. Enter and come here and drag it towards my right. So you can see it is almost like decimal point 0.8 it is there. So 26%. So both should match. I hope you people have understood till here. So now you people can try with your cash flow statement and your free cash flows.
How did you get net change in cash?
Net change in cash, it is cash flow from operating expenses plus cash flow from investing activities plus cash flow from financing. So when we had done the cash flow statement, so we did the financial statements, income statement, balance sheet and cash flow statement. In that, net change in cash, that is CFO plus CFI plus CFF. I hope you people remember, you recall, we had done with the
Yes,
financial
ma'am.
statements. So net change in
Okay,
cash, this
ma'am.
is how we are.
And ma'am, what is this checksum?
Checksum is both. When I am talking about the cash flow, this one. So here I need, when I am giving the checksum, so I need to calculate. So when I give this one and enter this EOP, BOP, so I should get zeros. So actually here the checksum, this one, it was not required because we will be doing it in the balance sheet. Both the total assets minus total liabilities. So here the amount should get tallied. Here it is not required. You can remove this. It is just for my reference I have put it.
Can you show your screen?
One second, I'm just taking the attendance.
Okay, ma'am.
Arikta, 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 are you there online? Arik,
Excuse me, ma'am, is there any information that you have for the exam, or will you give it tomorrow?
I had put in a word to the management mark to the coordinator. I informed that you people will be back by 6:30. So from 6:30 we can start up with the exam because 6 o'clock it will be too early where you won't be able to join. So I have informed him. So he told that tomorrow he will speak to the college coordinator and he will confirm the timings. So
Okay, ma'am.
tomorrow you will get to know what time the exams will be conducted. It will be for 1 hour. Okay.
Okay.
Arikta, I just wanted to know that you have not attended any classes till now. So today you have attended. So previously you have attended. Initially you have attended three class continuously. After that you have not attended any class. Why, ma? So I'm speaking to Arikta. If you can answer me, ma, you have attended initially three classes. That was beginning of the course. Like 16, 17, 18 you have attended. After that, continuously you have not attended any class, and you are attending today. So how you will be able to take the exam, or else if I have missed out with any attendance or something, because every day I check and I mark the attendance.
Ma'am, I think she's texting. Like, I think she's texting on the chat.
Okay, Ma, you had the competitions, but you have not attended any classes. How you are going to take up with the exam? Won't you find it difficult? In the chat box only you can put, because almost out of this many classes you have attended only three class. That too in the beginning. That was only the introduction part and Excel introduction and few concept of Excel you have attended. You have not attended any of the financial statements classes. You have not attended any of the Excel. This one solver you have not attended any classes. So case studies nothing you have attended. It's not that I'm complaining or something. I just wanted to know how you will cope up with the exam. So you are watching the sessions, recorded sessions, so you are not finding it difficult. You will be able to take up with the exams, right? Still, I'll just check out with my coordinator what can be done, because it is hardly four classes you have attended, and minimum this much of classes should be there in order to take up with the exams. But still, I'll just put in a word to him that she is following up with the recorded sessions and she'll be able to take up with the exam she has told. So, what can be done further? I'll just inform you tomorrow's class. Okay. So today, Adrika, Ananya, Arikta, and Charita, Tejashwini, and Dia, Harshita, Rida, Jenny, Rupa. Uh, I don't know if I'm spelling it wrong. Sorry about it. Lal Tulangi, Mitali, Sara, Shivaranjini, Shohana, Soumya, and Srinanda. Srinanda? No, not Srinanda. Still, Soumya. This many people have attended today's class. So tomorrow we'll see if we get sufficient time. We can solve. We will solve with some one more case study, and we will do with the revision. So if time is not permitting, we will do only the revision part from the beginning, whatever it is there. So I'll just see if I can get the previous year questionnaire. So somebody was asking if we can see the model question paper, how it is. So let me check if I'm getting the model question paper. We'll try to solve that one also tomorrow. Okay, so let's keep it for revision part. If we are getting some time, we will solve with one more case study. If not, we'll keep it for revision so that day after tomorrow we'll be prepared with the exam. Okay, so exam timings I'll let you know tomorrow.
Even I have attended the class.
Name ma?
Excuse me, ma'am.
Yes ma. So I hope you people can see my screen. So I saw these names and I'm just marking the attendance. So now who told that I'm also attending the class? So I just called out the names also, whosoever I have marked the attendance. So apart from the names which is appearing on the screen, apart from it, is anybody's name missing out on the screen? Forget about my marking. I am marking based on the people whosoever name is appearing on the screen. And on call. This is, I don't know who is this. Somebody is on call. I have not marked the attendance of this person, I believe, because I am unable to see the name. This is Harshita SN. Okay. Harshita SN. Okay, I have marked the attendance for Harshita also. Apart from it, anybody? Okay, so you people can solve the free cash flow statement.
One last question.
Sorry?
I have one last question.
Yeah, ma'am.
Mom, this net income, how did you get in this
Which net?
free cash flow equity?
Net
This free.
income, I have just taken the value from profit after tax. So after tax here 0, it is nothing. So I am taking the value of profit after tax followed by the next year's net income. So profit after tax, that is your net income. For here 0, it is nothing. So I have just taken it directly like that. So here you can see, and I have just dragged it towards my right. Means whatever the profit after tax values are there, I have taken it here.
Now my profit after tax is wrong.
Profit after tax is wrong.
Um, yeah, it
Why it
is
is wrong?
from the second year. It is wrong. May I know the income tax? How have you calculated?
So income tax
My
first year it is 0 because profit before tax is 0. Second year I am just showing you. So that is 5%. So here you can see tax rate 5%. They are telling to assume that it is 5%. So that will be on the profit before tax into 5%.
Okay, got it. Thank you.
Yeah. So hope you people are able to solve it. So any doubts related to Volvo model case study, you try to solve it, and if any doubts, you can get it clarified tomorrow. Shall we wind up the session, girls? Or you need some more time? I'll wait, that's fine. Type in 1 if you are okay, you are able to solve it. We'll wind up the session, miss. Type in 1. Not, I'll wait for another 5 minutes. You can take time to solve it. Or once again, you people try to solve it, and tomorrow, if you are having any doubts, you can get it clarified. Okay, so